Stock Market Morning Prep video for Thursday, June 19th. We get a big end of day rally, compliments of Janet Yellen and the FOMC. Their statement came out. Everything was basically status quo. They did cut another $10 billion on their asset purchases, but to be frank, everything was the same. Nothing has changed. And I guess the markets like that because they rallied them actually at the end of the day after her comments about right around 2:30ish, 3 o'clock into the last hour of trade. So where do we go from here? Well, the song remains the same. You have to stick to the trend. Unfortunately, we are still overextended. We're challenging the highs. The ES in front of you in the screen here, as you can see, 1954.75 is the high. We're 5 points away. And then where do we go from there? Well, we could actually go to the next extension. 2000 at this point really isn't out of the cards. I know it sounds ridiculous. It's crazy. We're only less than 50 points away. Why not, right? I mean, we've rallied here about 15, 16 trading days. We pulled back for 3. We based for 4. And now we've challenged the highs again. So, I mean, anything is quite possible. I would not be looking to short the market because the markets are here at this highs unless you are looking to hedge yourself. And that's a really good thing to do. And I'm a big fan of that. What I'm doing is because I'm not looking to take any overnight risk unless it's manageable. You don't want to take a lot on. If you have 2, 3, okay, not a big deal. But if you look, if you have 5, 6, 8, 9, 10, 12 trades that you're taking long, I mean, anything could really happen. I know it sounds like a broken record, but you really need to understand that what's happening in the Middle East and Russia and Ukraine is not really good. And remember, we have to keep an eye on crude oil. Crude oil really didn't do much yesterday. Took a little bit of a breather, but remember, and I've seen crude oil trade for many, many years, crude oil can explode from where it is now, even though it's overbought, to go above 110. And once it gets above 110, I think it takes a beeline shot right to 115, 120 again. And if that happens, I think that is what's going to put the brakes on this low volatility, high complacency rather, environment that we're in. And everybody says, oh, this is great. But you still have to look at the big picture. And I'm a firm believer, and I like to see when everything's clicking at the same time, and that's when I can get a little bit more aggressive. You can't do that here. Everything is overboard. A lot of stocks have almost doubled in 15, 16 days, and more of the high beta names, I should say. So what are we looking for? We want to look for stocks that have base, that have already made its move, and then maybe had a bad earnings announcement or a bad pre-earnings announcement, or for that matter, a downgrade from an analyst, a good quality analyst. That's something that's interesting. Okay, and that's what I'm looking for, bases like that. Maybe sectors that are out of favor, that are starting to heat up again, and that's what I'm going to look for actually day trades. Yesterday, I really don't trade the Fed. I'll do a couple of trades, but in general, I don't trade the Fed day. Most professionals do not trade Fed day unless you see something that's really exciting to you. Now, there's a lot of setups that are shaping up. Some of the banks, some of the solars, which actually did move on the movement in oil. But they were quick. You had to be really quick with that. But I like some of the solar sector. Some of the banks are selective banks, actually. Some of the cloud plays that have gone nowhere, like CRM. That's actually a pretty decent one. So that is what's going to really be my focus. Not stocks that have already rallied, 30, 40, 50, 60% in a real short period of time. That's not what I'm looking for. So when that happens, obviously your selection is limited, but the risk reward is greater because you're looking for stocks that are still good companies that have maybe based, like a Twitter, Facebook, that's been basing, social media. Stocks like that have been kind of out of favor for a few months and now starting to come back to the limelight. Those are stocks that you want to look for. All right, you don't want to look for stocks that have been, like I said, up 20, 30%. All right, so let's run through the indexes. It's going to be a whole lot of the same. Transports actually did well yesterday. Compliments of FedEx. FedEx was up about $6 yesterday on their earnings. So now we're back up here. Do we challenge the highs? I wouldn't put it against you, but I do think that the oil factor is going to hinder on the transportation sector, and I think this eventually will be a good shorting opportunity if you're not short the transportation sector. And I do think that in the longer term, meaning months going into December, January, I do see a real big pullback in the transportation sector. Obviously, oil is going to need to help that, but I do see that kind of moving lower. Right now, you don't want to say, okay, I'm just short to short. I mean, unless you're doing some sort of an option play, that's a different story. Okay. Now with the Dow Jones, again, remember, as you can see here, basing for 3 days, we came back up again, and now we're starting to challenge the highs. This is going to be monotonous on all the other indexes. We had some decent volume, and all of that volume really came at the end of the day. IWM, as you can see, we identified this bull flag 3 days ago, came out of the bull flag, and now we're hitting that 78.6% retracement. Usually when you break that 61.8, that golden ratio, if you will, in the Fibonacci area, then it usually goes and breaks higher, and I believe that this probably will challenge the highs. Now, we did have a little bit less volume than the previous day, but it's still, price action is still higher. We took out this local high here, and then now the next area here, if it does break here, would be, of course, challenging the highs, and then the bigger picture would be the 1272 extension of 124.22. Okay, so but quite bullish though, and as you can see though, we're way away from the 8 again. Logical place for a pause or a pullback on all of the indexes. And last is going to be the Qs. We have tech doing okay. Apple starting to pick up a little steam. With that split that Apple had, it almost kind of ruined the stock because it's not as quick as it used to be for intraday price movements. But we'll keep an eye on that as well. But anyway, lastly, the Qs, as you can see, it is as well made new highs, 93.10 on the daily chart. So it has now made officially new highs, and as well as the market. Most of the markets are looking to go higher. You don't want to fight it. Stick to the trend right now, which obviously is long. But you can short relative weakness if you have, again, a downgrade or something, someone was speaking about the stock or bad news out of the stock for that day. You can. It's still most, with this euphoria of buying and this extreme complacency, and I'm sure everybody hears it too as well. You know, guys that are in the shop rights and shopping centers are talking about stocks, mechanics talking about stocks, and it's just a little scary to say the least, especially when the VIX is at extreme lows. I'd like to see the VIX at least 13, 14, a little bit of fear in the market. But when you have this extreme complacency, you got to be very, very careful. Okay. Hope that helps. Again, look for stocks that are basing, and then look for entries for the day. I think that's going to be your best bet for your risk reward. And then I would reduce shares or contracts of what you're trading until this market can give us a good correction. We don't know when that is. I'm not planning for it at the moment, meaning that I do see big price movement coming, but no one knows when it is, obviously. But if this Middle East starts to heat up, I do think that oil will rattle the markets, and I think that's going to be probably one of the factors, aside from China. And if China can continue to manipulate their numbers, then obviously that's not going to happen. But just keep that in mind, guys, all right? The markets are climbing a wall of worry, and as traders, this is what we're dealt with at the moment. So let's just be nimble, cognizant of what's going on around us, and of course, let's look at our other markets around us as well, so you can get a big picture as a whole. All right? Have a great day. We'll speak to you tomorrow. Take care.